Welcome to another edition of our weekend business program, Capital Market Live on Channels Television. I'm Ladi Williams. Let's take a look at how your money performed this week. And we start off with major global stock markets performance on Friday. Major world markets indexes around the world ended the fourth trading week of January positive across board, fueled by better than expected GDP numbers from the United States, while investors digested a mixed performance from corporate earnings results. Stocks on Wall Street closed the week on a high note, with the Nasdaq recording a fourth week of gains, while all the major averages are on pace for a month of gains. In Europe, the UK's FTSE 100 gained 0.05%. The German DAX index advanced 0.11%, while France's CAC index that notched up by 0.02%. And across Asia Pacific, Japan's Nikkei 225 closed the day earlier with a 0.34% increase. China's Shanghai Composite, that index gained 0.76%, while Hong Kong's Hang Seng Index ended Friday's trading session, that was up 0.54%. All right, now for analysis, let's bring in Olumide Adesina, our financial market analyst, to tell us how what drove U.S. markets this week. Well, great to have you, Olumide.
Yeah, thanks for having me, Ladi. Yes, it's an happy Wednesday, Saturday.
Yeah, so it looks like this January is a strong month for U.S. stocks. Is this a sign of things to come for 2023?
Yeah, I think it's fair to say the stock bulls are having the ride on. You know, just like you rightly said, if you look at monthly gains already, we've seen the Nasdaq surging at record levels. In fact, barely when the year started, it was just struggling to stay above the 10,000 index points. But right now, it's moving above the 11,000 mark. And that's pretty much because we saw heavyweights giving some blockbuster results. Look at Tesla, for example. Tesla this week has recorded about 33% appreciation in share price. And that's because of recent reports on his earnings. And Elon Musk gave a comprehensive bullish outlook, despite the concerns that the world's most powerful economy might go on recession. Also, we saw stellar gains from BuzzFeed on the fact the share even appreciated for more than 100%. We saw stellar gains also from Salesforce and other top tech brands. And interestingly, the week started like it was going to be a bearish moment, and the bears were going to have the ride when Microsoft's results caught a lot of investors based on the slow traction we saw in the cloud system. But interestingly, the influx of all this positivity around the market and also the downcast report on Intel was not enough to break down the market. So it's been interesting, Ladi. And, it makes investors really bet on the upcoming week. We're still hoping to see results on Apple and Google and Amazon. And, the positivity in the crypto market also has helped crypto exposed stocks, particularly Coinbase. Coinbase has almost doubled from its record low. November, you recall, Coinbase was struggling to stay above 32. Right now is hovering above $60. So interesting signs, with Tesla, right? Tesla, now is looking to break above the $180 mark. This was a stock that at the beginning of the year was just floating above $100. So that it tells you that institutional investors are betting in, and with the US dollar also depreciating in value against major currency, that has kept the bulls rampaging.
Interesting how things change, because remember, all through 2022, the bears took control, and some investors are still licking their wounds from 2022. Is it time for sideline money to come in?
Well, it's very tricky to bet against the bulls. I'll tell you why. Because if you look at this year alone, the Nasdaq is up 11%, and that pretty much tells you that the momentum across risky assets, the grab on it is really going high. But there are concerns that the U.S. debt crisis, limit crisis, where the Congress have not reached out a deal that could weigh on the market. And also the fact that the US GDP report suggested that the US economy still remains very strong, and that could give the US Fed incentives to hammer on rate hike. Thirdly, the US Fed also is trying to reduce their balance sheet, and in the last year we saw about 500 billion taking off their balance, leaving about 8.5 trillion dollars. So with that liquidity getting mopped in the market could also put pressure on the bulls. But Ladi, the odds betting against the bulls right now is very, very hard now.
Very, very high. Thank you so much, Olumide Additional, financial market analyst. It'll be interesting to see how February plays out for these markets. Thank you.
Thank you for having me.
And back home, Nigerian bourse ended the fourth trading week of the month on a positive note that the all-share index gained 0.12%, despite sell pressure in about 3 sessions. At the same time, the market capitalization added 17.14 billion naira to its total value, following investors' interest in some bellwether stocks on the Nigerian exchange, while the market's year-to-date performance remains positive at 2.74%. In sectoral performance, 4 out of the 5 key sectors of the NGX ended with positive sentiments, particularly the oil and gas counter, while the consumer goods sector index of the market was the lone loser. Triple G topped the list of 44 gainers, up by more than 31%. Computer Warehouse Group led 28 other losers with 31.25% price loss, while the trio of FBN Holdings, GTCO, and Fidelity Bank were the major contributors to a lower turnover volume of 756.76 million shares this week. And the outcome of Nigeria's upcoming general election could restore investor confidence, attract fresh capital into the country, and forestall further pullout of funds by foreigners. And that's according to the Chief Executive Officer of the Nigerian Exchange Limited, Temi Popoola. He made this known at the Exchange 2022 Market Recap and 2023 Outlook virtual event on Wednesday this week. While outlining NGX strategies for this year, Mr. Popoola highlighted some of the expectations for the capital market and the Nigerian economy within the election year. Take a listen.
What will keep us busy? It's a few things. First and foremost, the exchange will be looking to position itself as a platform of support for the new administration. When we look at our nation, some of the key challenges that are facing the nation are things that you can solve working with the exchange. So we talk, for example, about tax receipts. We say that tax receipts in Nigeria to GDP is about 6%, one of the lowest in the world. Well, if you situate things properly with the capital markets can actually help you enforce that because of some of the regulatory and sort of statutory nets that we have, through the markets. You talk about, for example, the new administration will be faced with challenges around liquidity, around sources of revenue, around sources of capital, perhaps from assets that are stale or that could be monetized. So I think at the heart of what we'll be looking to do in 2023 is this left bottom bucket here, where we'll be presenting the exchange as a mechanism for getting this done. Second of all, we would be looking back at listings. I spoke earlier at the fact that because of some of the listings we had in 2022, we saw knock-on effects on our trading. The new listings we've had in the last 18 months have been responsible for 15% of the trading in 2022. So how do we get more listings to the exchange? Of course, this is an age-old question, and we will continue to do our bit to try to address this. A few things that we'll be doing, things around advocacy. I spoke about the free zone earlier. What we find is there are many companies in that zone that could do with listings, but we need to sort of create the right environment for that to happen.
And that was the Chief Executive Officer of the Nigerian Exchange Limited, Sir Temi Popoola. They're giving us what to expect for the exchange in 2023. All right, let's bring in Mr. Rotimi Fake-John, now a stockbroker, NGX, join us via Zoom. Great to have you on the show. Good evening. I think you might have to unmute yourself.
All right, good evening.
Fantastic. I hear you now. Great to have you. So, quite an incredible year, 2022 for the Nigerian exchange. That best performing fourth, globally with a nearly 20% gain, and I'm wondering, was there any other remarkable feats you think you saw in the market? Any milestone, any other milestone that was broken?
Well, I think one other milestone is at least that we had two major listings within the year, and what I will call an enhanced listing, which was Access Bank to Access Corp, which was also listed. I think those two listings actually added substantially to the market, and those listings are Boa Foods and Geregu Power. And I think coming from two diversified sectors is actually a great milestone for the market. And hopefully we believe that they'll be able to build on what happened last year to further consolidate what will happen this year. And for the laurel performance of the market in the year 2022, I think it definitely will give a lot of traction to activities in the year 2023. It may definitely encourage more corporates to get listed on the exchange and also for a better market performance. Right now, we have a year-to-date position of 2.72% positive, and I think it's quite a very fantastic way to start.
Quite an impressive way to start, and it's a new investing year for players in the domestic stock market as well as an election year. What do you see as challenges and opportunities for investors in the NGX?
Well, I think one of the major things is that the local investors have actually taken the rightful position in not letting the market down, because with the almost 80% exit of foreign portfolio investors from the market due to foreign exchange challenges and other factors, the local investors have actually come up with quite good participation in the market. And I think this definitely will stand well. And going forward, I believe strongly that one other thing that will stand well for the market is if we get it right concerning the 2023 general election. Should we get it right, the market is definitely going to go places.
That'll be interesting to see. But what new measures can the NGX use to deepen the equities markets, for this year?
Well, I think they have a lot of challenges, because some of the things that will happen is definitely not within their purview. The perception of the Nigerian economy from outside world is quite in the hands of the federal government and those that are managing the economy. So there's very little that the exchange ought to do that they have not done. And I think we only hope that the fiscal policy will match with the monetary policy this year. There will be a lot of coherence within those two policies, and that definitely will enhance how the market is perceived, which will further translate to the performance of the equity market. But for the Nigerian Exchange Group and also the Securities and Exchange Commission, I believe they've done substantially well to be able to put things right. So we are just looking forward to what the federal government will do with respect to getting it right for the economy.
And do you expect to see any public offering by some listed companies this year? And what is your outlook for the IPO market on the NGX?
Well, I think it's a very dicey one in the beginning of the year with respect to the general elections taking place February 25 and March 11th. I think when those ones are off the hook, then definitely we may see better things happening. They've talked about the NNPC Limited or PL Limited coming to get listed. We believe that it will put all things in place in order for that to happen in 2023. And should that happen, definitely it's going to blow up the market. And that is exactly what we are expecting and hoping for in year 2023. So if that should happen as well, it's going to enhance other corporates, either small or big, to actually come on board. And I believe strongly that the Nigerian Exchange Group, they're not resting on their oars to actually make this happen.
All right, we'll definitely be watching out for all of that. But we'll take a quick break now, and Mr. Rotimi is still going to stay with us. When we come back, we're going to discuss investing in a high inflationary environment. That's our next conversation. Just stay with us. right, welcome back. Let's take a look at some stories that made headlines this week. The Debt Management Office has announced the issuance of 4 federal government bonds offer for the month of January. According to a statement released by the DMO, a breakdown of subscription offers, each worth 90 billion naira, include February 2028 FGN bond, April 2032, April 2037, and April 2049 FGN bond, all with separate reopenings. The Debt Office adds that the auction date for the bond offers is on January the 30th, while the settlement date is on February 1st, 2023. And Nigeria's central bank has raised its benchmark lending rate, also known as the monetary policy rate, further by 100 basis points to 17.5%. The CBN governor, Godwin Emefiele, announced this at the end of the two-day rates decision meeting of financial market regulators in Abuja. Addressing journalists at the end of the two-day meeting in Abuja, Mr. Emefiele said the committee voted to keep the asymmetric corridor at plus 100 and negative 700 basis points around the MPR, and voted to keep the cash reserve ratio at 32.5%, as well as the liquidity ratio at 30%. This fifth time, the CBN will increase the MPR from 11.5% across 4 consecutive rate hikes since March last year. Before now, the CBN Monetary Policy Committee in November raised its benchmark lending rate to 16.5% in a sustained push to control inflation and ease pressure on the naira. And Nigerian Exchange Limited has revealed plans to allow Nigerians buy shares and other securities at the stock market with the unstructured supplementary service data, also known as USSD. This was disclosed by the Chief Executive Officer of the NGX, Timmy Popola, while speaking during the annual review and preview of the capital market on Thursday this week. According to him, the use of USSD shortcode is a collaborative arrangement being championed by the NGX in partnership with telecom companies, banks, and other stakeholders. He explained that the platform will further digitize operations at the stock market and deepen activities at the market. He added that the exchange has also set its sights on development of new products aimed at attracting the lower rung of the Nigerian demography. We still have Mr. Rotimi Fakejo, now stockbroker with the NGX, still with us. Thank you for staying on.
My pleasure.
So the battle against inflation continues in 2023. And, obviously they say if the central bankers say if inflation stays high, they will continue to raise rates. So if inflation stays elevated, what is the best portfolio mix to stay ahead of inflation in 2023?
Well, I think with the TBs, the TB auction that CBN did, I think looking at the outcome and the rates of such bills, we saw 2% for 90 days. We saw 4.2% for 182 days, and I think about 7.4% or thereabout for 364 days. And I think when you compare that to the return dividend yield, that is the return on equity investment, you will realize that for most stocks in the market, we have a dividend yield of at least about 8% for the blue chip stocks, especially the banking sector stocks and also some consumer goods. So if you look at it that way, you definitely will see it that is much better to have more of your fund in the equity market, and also for you to allow a spread. You also do some money market investment. So I will still advocate that investors keep more of their money in the equity market vis-a-vis the present inflationary trend in order for them to be able to hedge. But we're looking at the money market instruments, I think the yield is not as fantastic as what we have for the equity investment. So the mix will still be there, but it should be more in favor of equity investment to money market investment.
Can you break it down in percentage? How many percent should go to equities?
Well, it depends on the risk appetite of the investor. We know fully well that the investing in money market instruments, at least the risk is not as high as that of equity investment. So depending on the risk appetite of the investor, but I will advocate a situation whereby for return purpose, we should look at maybe 60 to 40% in favor of equity investment.
And looking at, where we are now with inflation, we've got that month-on-month deceleration, last year. What do you think, inflation has peaked in Nigeria?
Well, it all depends. There is one major event that may happen this year, which may at least go a very long way to impact and reverse the inflationary trend. And that is if the Dangote refinery kicks off, maybe in the second quarter of the year or earlier, then definitely the kind of inflationary pressure we have on a lot of activities related to petroleum products will definitely abate to a great extent. So if we get it right, then definitely I can say that we have gotten to the peak of inflation for this year. But if they don't start early enough, then definitely we may see things trending upwards again.
And it's still early days in 2023. What do you think investors in Nigeria should look out for in 2023 before going into the market full on?
Well, I think the fact still remains that companies with good fundamentals are the ones that should always be the choice of investors. Gone are the days whereby investors look at stocks that are low prices. But this time around, what they should look at critically is the stock I want to invest in, has it been paying a dividend in the last 5 years? If the answer is no, then definitely you may not have any business to go into that stock real time. But looking at it critically, I think those are the real factors. So we have a lot of that in the banking sector stocks, we have in industrial goods, we have in the agriculture sector, and I think in recent time, ICT sector has also proved their worth. So I believe that investors should be able to make a very viable choices from those sectors.
All right, let's hope for a profitable 2023. Thank you so much, Mr. Rotimi Fakejo, stockbroker at NGX. Thank you.
Welcome.
All right, let's take a look at what to expect for next week. Starting with the bonds market, we see the Debt Management Office to hold a 2023 first FGN bond primary auction on Monday, January 30th, mounting a total of 360 billion naira on 4 instruments worth 90 billion naira each. The result of the bond auction is expected to influence investor sentiment. In the T-bills market, a slight expansion is expected in yields amid a tighter system liquidity. In the money market, overnight rates are expected to expand from current levels amid expected tightening in the system liquidity on anticipated debits for the FGN bond, OMO and FX auctions. And for the equities market, NGX is to be flooded with corporate earnings as more companies publish audited 2022 Q4 and full-year results. Investors are likely to remain cautious due to medium-term expectations of uptick in fixed income yields. And that's it on the show today. Thank you so much for watching. I'm Ladi Williams. Bye for now.